Hello traders, Nick Shaheen here looking at XPeng. XPEV is the ticker. The first video I did on it was I think January 10th. It had already triggered a bearish pattern, and I had said that it's priced in half of it. It could fall all the way down to like 28 or whatever the target was. I said, however, I would look up and the bulls can negate it by triggering their own pattern off of 48th. In fact, I took a snapshot of the video just now, and this was 48, and this was 52 and 56. And I said, I think I literally said, once the bears cannot stop them here, then they're done for, they're toast, and then 56 will come. So that's exactly what happened. So now what? First of all, this is not an investment video. If you love the stock, I would probably nibble here a little bit. If I want 100 shares, I would nibble maybe 20. It's in the middle of its lifetime range because it's fairly new on Wall Street. So I wouldn't go all in, especially because the entire market is so far extended. We are so far above what we were before last January. So last January, we had full employment, we had expanding economic conditions all over the world, and no virus. Now we have maximum unemployment. We have horrific economic conditions. Proof is that the government just panicked and spent another $2 trillion. You know how much money that is? I don't think people realize it. Ask 10 people on the street, what comes after 1 trillion? They probably don't know. That's how big that number is. We shouldn't be throwing it around. So if things were hunky-dory, they wouldn't be throwing trillions at it. For perspective, the biggest financial collapse in 2008 cost under 470 billion to bail out. 470. The TARP was up to 750, but they didn't use it. And they made money off of it because they bought broken banks and they fixed them, and GM and such. So this is a complete calamity, and governments are complete panic. Anyway, and we have a virus that's killing now more than ever in quantities, not at rate. So why are we now double as good as when we were with idyllic conditions? It just doesn't make sense. What that means, it doesn't mean to short. It just means to be cautious and not be all in, regardless of how good this one opportunity is. All right, now to a trading talks. I pointed out 48, right? It was a lid from which they broke out, tested it, lost it, fought over it, lost it, broke out from it, tested it, and now they're testing it again. So this is where I would have to make an assumption. And let me show you the lines I have on there. I'm trying to make them as simple as possible. So I don't know which way it's going to trade tomorrow, but I know what happens if something gets crossed. So the assumption here today I could have made is to try and swing trade it up. What I want eventually is a breakout from 60. That has a new all-time high, or at least a challenge to an all-time high. So it's like buy the rip or buy the dip in order to catch the swing, right? So this is where I'm buying the dip to catch the swing. And I would stop myself immediately after 45.90 because I don't want to find out how much of this they might price out. I don't want to take this ride down. It might not be fully down, but I don't want to find out. I can get out here with scratch and then try to swing it lower. Period, end of story. It has support at 44.5 and it has support at 41 and change, but I don't want to find out if they're going to hold because I don't know what conditions the markets are going to be in. So on its own, it might be fine, but in a falling market, maybe it's not. I don't know. So this looks like a head and shoulderish, whatever. It's a neckline. It's not pretty to lose a neckline. Ideally, I want to get long it, swing up to here, fade a little bit, get up over this little red line, and slog myself through this whole mess, maybe fill this little gap right there and struggle a little bit here, and then continue on the struggle all the way up to here. It's okay to fade back into this level and build it, fade back into it and build it, and eventually have this battle over here and go boom. Right? That's ideally. So catching it from here, then you can trim on the way up and whatever. So now the question becomes, how do I do this? So people say, buy it, buy the shares. Certainly. I don't want to view it. Thank you. So I can buy shares and hope it goes, or I can buy calls or call spreads and hope it goes using options. So options are scary to a lot of people because the prevailing theme is that, oh, they're so much more riskier than stocks. That's false, and I'll prove to you in a second. They can be, but there are ways that are way safer than actually going along with stocks, and I'll show you how. So buying a call or buying a call spread, time is immediately my enemy, especially if I buy a naked call, especially when the VIX is so high. It makes all the prices inflated. So it's not ideal to buy a call. If you have one bad day in the market, in the stock, the calls could be down 40%, especially if they're out of the money. In the money calls will die slower, but they'll still die 15% in one day. That's a lot to lose. The stock doesn't need to be down 15% because you make so much more. It's more leverage. So if you have an up day and you catch it right, you make so much more in the calls in percentage basis than actually owning stocks. So if the stock is open up 2%, the calls might be up 15, 20%. But it works the other way too. So it makes it less of a conviction. So here's my favorite way of doing it. I like to sell puts in stocks I don't mind owning. So on a bad day and a high VIX, what makes more sense than to sell something that everybody wants? Then you can ask for whatever you want. So this is where selling a put is safer than buying a share. Now, this is important. Buying a share. So instead of, that's important, buying 100 shares and spending $4,700 today, instead of doing that, if I'm willing to do that today, why wouldn't I want to collect money to buy it at $43.50? What you say? Yeah. So here, let me show you. So we'll go to, here, I'll take that out. This is February contract. Puts over here, calls over here. 47 is current price. I could spend $4,700 to own 100 shares. Or I could go here and say, you know what? I want to buy the shares. I just wish they were cheaper. No problem. How about an order that I can open, I could have opened today. This is not a recommendation, by the way. These quotes are kind of weird, especially when you look at the spreads, but there they are. So credit I receive to open this trade. I receive $200. To do what? As soon as I hit send and somebody takes it, it fills. Now I'm on the hook because I promised somebody. You know, Billy Bob out there owns 100 shares and they're worried. So they want to buy insurance at $43.50. I say, hey, Billy Bob, no worries, man. I got you. If you want, you can give me your shares at $43.50, no problemo. So I may wake up one day owning 100 shares in my portfolio of XPeng. If I do that, then it would show cost basis $43.50, not where the price is at the time they give me the shares. So if the price is at $42.50, you think I lost $1, right? Nope, I'm still up $1. Why? I collected $2 to open the trade. I collected $2 to open. So my break-even point would be $41.50. How easy is that, right? So tell me how this is more risky than owning the shares from 47 and writing it down 15, 14%. So somebody, if I had bought the shares here and the scenario was that it fell to $42.50, I already lost $5 a share. So that's a big ride down. Whereas if I did what I did today, I would still be profitable. I wouldn't start losing until the stock hits $41.50. And if they give me the shares, sometimes they don't. Then I can turn around and sell them at any point in time. The stock may pop the next day after they give them to me. It's happened, trust me. This year, a friend of mine we were discussing in the chat room. By the way, there's a link to the chat room down below. You can click it. It's free to try, but it's not free to stay after 10 days. But it's worth every penny because we do this all day. So they were short a Boeing put. On Friday, it closed within a penny or two, and then they were assigned the shares. Monday, Boeing popped 11%. That was the day they said, oh, we're going to fly. Looks like the authorities are going to let us fly to max or whatever. So the person that exercised their option on the put lost a ton of money. They paid to buy the option, and then they exercised it, and then the next day it pops 11%. So it was happy times for whoever sold that put. Doesn't always work out that way, but it sure is easier than owning it here and writing it all the way down to here. So I would not sell a naked put unless I'm willing and able to own the shares. I would not sell a naked put unless I'm willing and able. to own the shares. Otherwise, if I'm just looking to trade the action, I would use a put spread, which looks like this. So instead of selling the put naked at 43, I would sell a put naked at 43 and buy another one lower, 43, 43 and a half, 43, 42, wherever I want to buy it and limit my losses. This way, if I wake up and the stock is at 0, I'm on the hook here, I'm off the hook here. I know exactly how much I'm going to lose for that period of time. All right, that was a quick lesson on options and why options are not always riskier than stocks. Sometimes they are. It depends on how I use them. This here was not an actual trade. These are numbers I'm using from an E-Trade platform, which, by the way, I do not recommend. It has not worked all week and last week in the morning and at night. It seems when people want to trade, it won't let us trade because everybody wants to trade at the same time, the people told me on the phone. So maybe I want to open a Webull account or a Robinhood account. I was told that these guys were able to trade. What's up with that? So it's a good opportunity to try swing trade it, but I would stop myself and try it later lower. Or if I wanted to wait for the breakout, this would be the first place I'd break out from, 52 and above. Catch the first burst, expect sellers here. If not, expect sellers here. If they can overcome this one, boom, they're here. Nick signing out.